Hello, good morning and good evening to Germany for all our participants who are listening today. Thanks for joining us for today's workshop, Success in the US, expert workshop on current trends on mergers and acquisition activities and market outlook in the US. We have a lot of participants today, so I would just say before we dive into it and start, we just give probably half a minute so that everyone today can log on, and then we will start with a presentation introducing our panelists today and also give the house rules for today. So just bear with us for a couple of seconds so we can see that the numbers of participants are currently going up. All right, we can still see the numbers going up, so I would say just give it a couple more seconds and then people can still join us on the fly. All right. So again, thank you for joining us to today's workshop. My name is Gerrit Ahlers. I'm the Director of Consulting and Corporate Development Services here with the German American Chamber of Commerce in Chicago. I'm glad that I have a great panelists, speakers here today. And before we start with the introduction of our panelists, I just wanted to give you some introduction about the platform we are using today. So on your right-hand panel, you can basically see that there are different handout sections. So you can go there, you can download all the informations and presentations that are presented today. You get all the contact details of our panelists in those handouts today as well. As you can see, for the housekeeping rules today, everyone is automatically muted. So if you have any questions, you will also see on your right-hand panel a chat function. So please feel free, go ahead, use the chat function, ask some questions, and we will try to implement them during the session today. If we're not able to answer your questions during today's conversation, what we will do is we will send each and every question to our panelists, and then they can answer them individually, reaching out to you directly, or we will be reaching out to you directly with some answers to your questions. Having that said, I would say let's don't lose any additional minute, and I would say let's dive into the speaker introduction. Our first speaker today, I'm very welcome to introduce, is Markus Hiller. He's the director at KPMG, and also he is one of our board members here at the German American Chamber of Commerce of the Midwest. So Markus, if you please can introduce yourself.
Yeah, absolutely. Thank you, Gerrit. So my name is Markus Hiller. I'm with KPMG Deal Advisory and Strategy. Over almost 30 years in the technology operations business, management consulting, and client relationship business. Spent most or half of my career actually in Germany, half of my career in the US. I moved to the US in about 2007. And, I spent most of my career at Siemens in global technology operations management roles. So I actually walked the walk. I'm not just consulting on it. And did a lot of carve outs, a lot of transactions with Siemens. And then afterwards, I was a short time, like 3 years with KPMG, building up starting the M&A practice in the technology space. And then changed to CHG Meridian. It's also a national member of this GACC technology finance company. Did a lot of consulting there too in terms of, asset management, technology management. Currently, again, at KPMG, Deal Advisory and Strategy, focused on assisting our clients with technology separation, integration, anything that's related to an M&A transaction or performance improvement. I think we have more slides, right? Yeah, thank you. So just real quick, what we do, I'm not going to go into every detail, don't worry. We help our clients to transact, grow, and realize value during transactions. It's all about deal speed. It's all about value during the transaction, during the transaction cycle. We also do performance improvement, either related to post-transaction or in general in terms of technology strategy or overall strategy. Our approach is very if we deal or we handle basically every vertical industry. So we have, knowledge and subject matter people in every vertical. So we have very industry, standard solutions, but tailored to our clients' needs. And we provide an end-to-end client experience basically in that space. Next slide, please. So, in terms of client-centric solutions, I think that's the most important part. It's important to create and deliver a great value, to specifically solve the client's challenges. That's what we're there for. But with the industry knowledge, again, to get the overall, the strategic advantage to utilize a team like that. It starts usually with the deal thesis or the strategic priorities, and then we put together, based on the capabilities that are needed, a specific solution towards our clients' needs. Yeah, that's it. Thank you.
All right, thank you so much, Marcus. And then let's go to our next speaker. I'm very welcome to introduce to you Steve Bragg. He is a partner with BlackCap.
Thank you, Garrett, and thank you for hosting us today. And good morning or good afternoon, depending on where you are, everyone. Real brief about BlackCap. We are a transatlantic management consulting firm focusing on the small and mid-size enterprise manufacturing sector. All of our team members are fluent German speakers. For me, German is my first language. Next slide. So all of us, we are experienced operators in the manufacturing industry, and generally provide services improving the performance of a business in the manufacturing space, either operationally or by expanding or entering new markets. So that's a brief overview of BlackCap. Don't want to bother you with all of the details here. Next slide, please, Garrett. Just a quick introduction about myself. I have moved to the US about 30 years ago from Switzerland to start a subsidiary for a Swiss machinery and automation company. So I have walked the talk. I have spent my entire career in the manufacturing industry, mostly with machinery automation companies, focusing in plastics processing, injection molding, extrusion, serving end user markets like in the automotive, packaging, medical device, consumer, industrial goods verticals. My mergers and acquisition experience stems mostly from acquisitions and integrations that I have done while running companies over my 30-year career. And I'm also currently a senior advisor to the investment firm Stout, advising Stout in mostly in the plastics sector, as well as machinery and automation sector. Thanks, Garrett. That's about BlackCap and myself.
All right, thank you so much. And then I'm very welcome to introduce our next speaker, Jennifer Watson, and she is attorney and principal with Masuda Funai Eifert and Mitchell.
Thank you, Garrett. I'm Jennifer Watson. I'm an attorney with Masuda Funai Eifert and Mitchell, and I assist clients in entering and growing the U.S. market. Sometimes that may be by greenfielding and setting up, just a single office. Then we help you expand throughout the U.S. But a lot of what we see these days is entering the U.S. market through a merger or an acquisition, as it increases the customer base, and more importantly, you can acquire talent that way, which is in short supply. If you go to the next slide, Garrett. Thank you. So we assist clients in a variety of different businesses. I personally work a lot within food, beverage, intellectual property, tech, in manufacturing. And I appreciate being here today. Thank you, Garrett.
All right, thank you so much. And now let's introduce our last speaker for today, Charles Weichel, and he's a partner at Middle Branch Partners.
Hello, everyone, and greetings from Dusseldorf. I'm today coming to you at the tail end of our day at the Medica trade show, which is considered to be is the largest healthcare trade show in the world, and here in Dusseldorf. Our firm is a true boutique investment bank. We focus solely on medtech, so we help companies buy other companies, help companies sell themselves. We also do capital raises. Principals are the three folks you see there on the screen in front of you. There are two of us in Chicago, myself and my partner, Larry Barr. Larry is an accomplished commercial banker and he and I have kind of grown the medtech business over the years, along with our next partner, who's Joran Borison. Joran was the CEO of the medical contract manufacturer in Asia for about 15 years, and he is active. He was with us today down here in Dusseldorf. And then myself, my background is also commercial banking, similar to Larry's. I was at Bank of America, GE Capital, and have been doing this kind of niche medtech investment banking for about 15 years myself. Next slide there, Gary. Yeah, so I've kind of stole the thunder of this slide. There are a lot of words, but the bottom line is we're really kind of focused on those three areas. We're not going out. If you come to us and say, I'd like to buy something in aerospace or I'd like to sell something in automotive, we're going to say, don't bother us. We'll be a little nicer than that maybe, but our focus is very, very laser-like, and quite frankly, that's helped our ability to be able to execute in the marketplace. Next slide, Garrett. These are just some representative transactions. There's some cross-border in here, like one of them is Elos MedTech buying a company down in Tennessee. We've got other deals with large companies, $500 million size companies down to 10, 15 million. So it's, middle part of the middle market down to the lower part of the middle market is where our focus is.
All right, perfect. Then next slide, please. So last but not least, I'd like to introduce myself. So as I said in the beginning, my name is Gerrit Ahlers. I'm Director of Consulting Services and Corporate Development here with the German American Chamber of Commerce. Born and raised in Germany, moved to the US almost 10 years ago, with the Chamber now for a little bit over 6 years. Before that, I had the luck to be able to open a subsidiary with my former employer. I always say I had the luck to experience the good, the bad, the ugly. It's meant in a very good way because you always plan how to enter the US market, you create your strategy, but then once you basically fulfill all the strategy and you start implementing everything, you see that you have to make some changes, adjustments here. There's a huge intercultural difference as well between the US and Germany. You don't see it firsthand, but there is. And that's also very important if it comes to an M&A project, and we will come later to that thing. If you have not worked with any chamber here in the US, we have several offices here in the United States. As you can see on the map, I'm located here in Chicago. We also have an office in Detroit. We from the Midwest can support you for all the states in the US if it comes to mergers and acquisition. If you have any questions regarding the US market whatsoever and entering the US market, expanding your business here, please feel free to get in touch with us. We have also a lot of events and other different services, but most importantly, because me and my team were taking care of that, is the consulting services. So what you can see is we do market research, recruiting, business partner search, site selection. We have virtual offices that's really of interest of companies right now to enter the US market, have a small footprint, and then grow or maybe while they're acquiring a company. So mergers and acquisition as well. We work together with a lot of partners, and partners you can also see here and experience here today. We do also collection services and credit checks, and we have also marketing and localization services. Having that said, that was basically our introduction of our speakers and myself. And as you can see, there's so many ways on how to enter the US market, be it with a greenfield, or if you just open a virtual office looking for some sales rep. But most importantly for today's session is through mergers and acquisition. So that's why we all have our experts here today. And having that said, I would like to dive into the topic because a lot of things have changed over the past year and a half, thanks to COVID. Well, not really thanks to COVID, but there has a lot of things changed. So my first question goes to you, Chuck. What do you think is the current state of the M&A market based on your experience, based on what you have seen over the last couple of months?
Yeah, I think, Garrett, it's a good question, and realize also that my answer is somewhat tainted by the fact that I'm very specialized. However, I think we also have a very good view of the entire market. And I don't think it's any secret. I mean, this is kind of in the daily news almost. Multiples are up, valuation, and numbers that we 3 or 4 years ago would say, you know, this is a fantastic deal for the seller. Today is kind of an average deal for the seller. Question is, why is that happening? I think there are a couple of answers to that, and maybe more than a couple actually, but the obvious answer is that there's a willingness to invest on the part of equity holders or equity investors, and a willingness to invest more. There's also been, over a longer period of time, an increase in the willingness of lenders, and hopefully we'll have a chance to talk about that a little bit later, but lenders have also been supporting these higher multiples, higher levels of lending, and that's not only people like Bank of America, but that's also mezzanine strips that come in to the deals. So these multiples are higher and significantly higher. The offset to that, and you will not see this in the numbers, and I'd be very interested to hear what my fellow panelists have to say about this, but we have been seeing a very high level of what I would call due diligence, quality of earnings tests, things like that. So a lot of investors are willing to put numbers they weren't willing to do in the past, but they're also demanding a higher level of due diligence and cleanliness and fit with the businesses that they're acquiring. So, and that extends, like I say, from everything from financials, like quality of earnings tests, to market analysis, to environmental, even at levels to support those higher valuations. And so at the end of the year, I don't know where the numbers are going to be. They're probably going to be up a little bit, but I think offsetting that is this other trend to higher levels of due diligence, which quite frankly, it can kill deals, and it can also reduce the valuations on the companies.
Okay, before we go into other questions, maybe we can stay with due diligence. Jennifer, I saw you were basically nodding and confirming that. What is your take on the higher level of due diligence? Can you hear us? Sorry, I think you're muted.
I can hear you.
Okay, perfect. Did you hear my question?
Garrett, who are you addressing? I'm sorry. I had a little bit of disconnect here.
Sorry, no problem. So Chuck mentioned the higher level of due diligence, and you basically were verbally confirming that. So my question here to you is, since you were confirming that, can you give us some more insight on the higher level of due diligence?
Yeah, so I represent clients on both the buy side and the sell side, and I'm seeing a lot more, particularly from private equity, doing a higher level of due diligence that you would normally see a strategic do. not just with respect to financials, but actually into the day-to-day operations and with respect to talent. Of course, before all this, everyone was looking at customers. Now there's a digger deep into vendors, suppliers, and the supply chain as well. So yeah, I would say due diligence has become, it's not just kicking the tires, it's looking at, kind of every little flow of the aspect. And also a big issue now is data and privacy and security as well within those systems.
Okay. And Chuck basically is an expert in the med industry. Steve, you're expert in plastics manufacturing. So based on your experience, what is the current M&A environment in the manufacturing industry?
Well, in short, extremely active. And I think right now there are primarily three drivers. One is a lot of the small and mid-sized enterprises in the manufacturing space, owner-operated, owned by baby boomers who are looking for an exit. So we have that trend. Number two, there are pending tax changes. The capital gains is most likely going to be taxed differently starting next year. So I think it's extremely busy because a lot of sellers are rushing to the finish line here before the end of the year. And really over the last couple of quarters, I mean, have tried to go to market with their business. And then number three, the third driver is there is just a lot of cash on the sidelines. So there is a profound willingness to invest. As Charles mentioned earlier, invest at higher valuations than what we have seen in the past. The other thing that I have started to see too, just to touch maybe on the due diligence topic, is that the ESG considerations in investing, it was mostly talk in prior years, but becoming a real subject where a lot of investors have very strong criteria in what they invest in, again, from an environmental sustainability and from a governance standpoint. I have been working with a company that has a high exposure to firearm manufacturing, for example, and just that fact actually has disqualified a lot of potential investors. So that's a very interesting trend right now.
Mm-hmm. Thank you for that. And Marcus, from a KPMG perspective, do you see any specific trends currently in M&A transaction?
I mean, definitely, especially, post-pandemic, there's pent up energy. There's capital to deploy. So a lot of PE firms there, they actually have to deploy capital. That drives the market up in that space. But also strategic buyers. When you look at the technical advancements and the need for digitalization, just to stay competitive, and the restructuring that comes with that. Makes especially in the tech and TMT market, that makes that very hot. So that's definitely a trend. But overall, same thing with the ESG, like it was mentioned. That's one driver. I think those are definitely the current trends. And I think they will continue for quite some time because there's literally pent up energy from pre-pandemic fundraising and so on.
Okay. And Jennifer, you mentioned you worked a lot in M&A deals in the food and beverage industry. I know for a fact that over the past couple of years, the food and beverage industry was a very hot market. Is it still the case?
I think it still is the case, particularly in the US. We like our snacks and food. So I think it is, but I'm seeing a lot of movement in also IT and technology, and obviously biosciences, medical as well. as logistics and transportation, particularly right now.
Okay. And Chuck, you're the medtech expert. So how is it? I mean, is there a lot of increase since Corona hit, that there's a lot of acquisition going on, a lot of interest from abroad in the US market?
Yeah, I think it's probably at historical highs. I think even though we lived through this period with tariffs and some turmoil, I think those things are slowly settling out in medtech. I think the big story in medtech, as it probably is across all industries, but particularly in medtech, is COVID and the impact on the companies in that business. And, there are basically three things COVID could have done to you. It could have helped you, it could have hurt you, it could have had no effect. And the companies who've been hurt by COVID have found that when they go to the market for M&A, that buyers generally are somewhat, there's got to be we're talking about due diligence, there's got to be a really ironclad story there that says this is why this quarter or this 6 months was so terrible. But people are understanding that. I think buyers are understanding that. I think it's actually, in terms of due diligence, I think a harder sell is some companies that have made a tremendous uptick because of COVID, because of the products that they sell into it. Here at the show yesterday, we were talking to a company that makes swabs, and their business is 40% up, and they can't keep up with demand. Buyers will see that, and that's not necessarily a positive in terms of valuation, because there'll be discounts taken for that uptick when things kind of return to normal. And then there are companies that are unaffected, and I will tell you, I could probably think hard about it and come up with one or two, but there aren't a lot of companies that have had zero impact. And just bottom lining this, it's not so much what has happened historically, but what are the changes that will happen in the next, say, 6 months to business models as all of these different pushes and pulls and forces come to bear. As we had a conversation, maybe it was this morning or yesterday, with a company that is very heavy into orthopedic implants for hips and knees, and they have found that business is weak during COVID, whereas their trauma business has done very well through COVID. So how those things play out and is really going to be I think the story in the next 6 months.
Okay, yeah. So you all mentioned basically it depends on COVID. COVID affected the whole market. Question on all of you, and whoever wants to take this question first. How has COVID really impacted the market, especially here in M&A? I mean, if you, for instance, you want to buy a company, you kind of want to see what you get into. You want to experience the company, come over to the US. There probably were a couple of investments that were hold off. What is your experience here? How really did COVID affect the M&A market? We know it was a little bit down, but now it's very hot right now. But what is your take on that? Anyone who wants to take it first?
Yeah, I can talk a little bit about it. From my experience,
I can jump in.
When you look at international investment, that was really very much on hold because of travel bans and so on, like everything that came with it, and including the volatility from a political environment that didn't really help either. So I think we see, there were some delays in investments, but now we see that pent up energy hitting the market. And so, it definitely impacted it in some industries way more than others. And I think, coming back to the due diligence point, it's always now one point that gets focused on is number one is technology, and number two is supply chain, which is very heavily impacted because of COVID, global economy, breakdowns in supply chains, and so on. That's from my end what we're seeing.
Okay, yeah, and that basically,
I concur.
Sorry, I think there was a couple seconds delay with you, Jennifer. Yeah, because I was about to say, what is your take on that, Jennifer? Because you also mentioned logistics, supply chain. That's what you saw. That's very hot right now. So that's basically the after effect or the effect of COVID, right?
It is, but I would say in logistics, particularly within the U.S. trucking industry, even prior to COVID, there was a lot of merger and acquisitions going on simply to get quality drivers and dispatchers as well. So, although right now we're seeing a lot of issues with the supply chain, even prior to COVID, there was some of that going on. But I definitely concur with what Marcus said.
Yeah, and we can also see that Merck, for instance, they bought some other logistics companies. But Marcus, from your experience, what is one of the key points for small and medium companies when they want to entering the US market? I mean, there's a lot of things you have to take care of, consider, but if you say, what is the main or one of the key points that they really have to focus on?
I mean, yeah, the number one key point, and I have experienced that on my own transitioning to the US, it's what you mentioned at the beginning of the conversation, the cultural differences. You know, it may look and feel the same as the market in Germany, but it's not. It's the US market. It's completely different. The competitive dynamics here are different than in Germany. You know, the things that might work in Germany might not work here. So I think that the key point, one of the key points, is make sure you do your market research. You know, have local people that you can trust and that understand the market and you know, understand your competition. Look for allies and prepare well. I think that's the key points in a merger or greenfield approach. It doesn't matter. I think that was my experience in key points.
Yeah,
Yeah,
I would also, sorry,
I
go
would
ahead,
add,
Chuck.
too, I think that I think those are extremely valid points, and I think they're correct. Just from the viewpoint of actual doing the M&A, I think people represented here really smooth that out in the tactical sense of how you do M&A. So I found that going to Europe, that American buyers are very accepted there, and we can talk some more about this, but how European buyers have a real niche, I think, in North America too. So there are a lot of opportunities, and you shouldn't let that put you off. If you're seriously interested in the North American market, you shouldn't be too worried about doing the deal. Now, analyzing the markets and the culture and those things, I think is a different story. We had a client who was going after a $180 million deal in Sweden about a year ago, and just the inability to travel impacted the processes. But we're really beyond that point now, and I think if there's a strong business case for something, you shouldn't be put off by perceived impediments to getting deals done.
Okay, that's really good to know. So we also seen that we have a new administration here in the US, the Biden administration. They have implemented a couple of changes. There will most likely be a couple of new laws or changes implemented in the future. So Jennifer, how is the Biden administration with respect, for instance, to the antitrust reviews of M&A projects?
Right. So the Biden administration is quite different. They're taking a serious look at a lot of mergers and acquisitions, particularly when you have to file for Hart-Scott-Rodino antitrust purposes. And they're really digging into it a lot more than they were before. And right now, there's also not there's early termination, where usually within 15 days you can get your merger or acquisition approved. That was suspended. That typically happens with each new administration. They put it on hold. But with the Biden administration, it's still on hold. So you have a minimum 30-day waiting period if you're subject to those filing levels. So there's a lot more look into that. Obviously, with the talk of tax reform and the change in capital gains rates, I do think that is going to affect a lot of sellers personally. So, and I'm not sure how that's going to play out in the market with the multiples and the deals that we see going on. But I do know from a sell side, there's a lot of concerns there for sellers and how this will play out in the market.
Okay. Do you know of any other hurdle points or issues that may a seller or a buyer face now with the new administration?
Well, in addition to antitrust, I think there's going to be a lot more enforcement on the environmental side with those aspects, and so I think there's a lot more due diligence in that area to make sure that if you're doing an acquisition, that who you're acquiring was more compliant with environmental regulations and requirements, and to be more of a clean business. I've seen environmental issues kill deals before, and I think that will be the case going forward, particularly with the social aspects of that as well.
Okay, yeah, that definitely makes sense. So next question would go back to Marcus. How does a typical M&A deal cycle or process look like? And to add on that, what are key outcomes in every stage of the deal cycle?
Yeah, it always begins with a strategy, do market research, identify potential targets, build an investment case, and then identify synergies after you identify the targets, potential post-close synergies, and how you can, basically realize those. Then the next step is a more deeper evaluation, like the due diligence, operational, financial due diligence, technology due diligence. And then, you can do your operating model considerations. And based on that, it's, you do your deal structuring and then you start negotiating. Then the third phase is basically the readiness part. It's a further process of the due diligence is more on the integration due diligence. If you're a strategic buyer or if you're a PE firm and you want to integrate the potential target with one of your portfolio companies, you do the integration planning, day one readiness, 100 days, and so on. Identify synergies again and in more detail. And then the next step in the process is value creation. What are the key outcomes here? Day one steps. What are quick wins? It's very important to look at quick wins and not over plan at that stage. And implement the operating model, basically that you've been planning during the evaluation. And then the actual transaction, it's always about transact, grow, realize value. I think that's the cycle. Yeah.
Okay, perfect. And insurance, rep and warranty insurance, for instance, they do, I believe, play an important role in an M&A deal. Is that true? I mean, Jennifer, you have a lot of experience with those insurance, right?
Yeah, it does play a role, and it's playing even more a role in the United States. It used to just be private equity that was using reps and warranty insurance on large transactions, and now we're seeing it used by strategics of the middle market, and particularly as Marcus and Chuck and Steve have talked about how much M&A is going on in the U.S. There's a lot of bidding wars. And so if you're looking to put forth a good bid to acquire a target, then you want to look at using representation and warranty insurance, because it gives the seller more security that sought after. They're not going to be personally for a lot of indemnification with issues. I will say though that, you know, we talk a lot about supply chain and all of that. You know, there some of the deals where before COVID you could get insurance on in the lower middle market, maybe 30 million or below. A lot of
Right.
insurance providers really have a tough time. You know, it's a staffing issue. It's kind of squeezing out the lower middle market. But if you're going to be, you know, above 50 million, then you can still get representation and warranty insurance and provide that as part of your bid to give a seller comfort and to make your bid look better.
Yeah, let me just say I have an actual story from today. This happened this morning, or U.S. time. One of our clients was trying to get rep and warranty insurance. What Jennifer says is exactly true. You know, it doesn't solve all problems. There's some companies that cannot be insured. One of them was our client. It was $10 million, too small, medical device risk, and then his financials, going back to the due diligence question, were not audited. So our reps and warranty insurers said, nah, we're not doing that deal. So, you know, it definitely has a place, and I think it's growing robustly, as Jennifer says. However, it doesn't fix every problem.
Yeah, yeah.
Okay. Well, having that said, also, depending on what kind of statistic you take a look at, I mean, statistically, close to 70% of mergers do not live up to the initial expectations. What can be done to optimize the success and the value from a merger? Steve, I would like to address this question to you. I believe you can give us some more insights on that.
Yeah, I'd be happy to. First of all, you know, taking the steps that Marcus laid out a couple of minutes ago here, to take those seriously. But secondly, and equally important, is setting reasonable expectations of particularly a merger. In my experience, you know, when like management creates an investment thesis, there is exuberance, and you know, it's being sold, I mean, to the investors, I mean, with the proverbial 1 + 1 = 3. And you know, sometimes 1 + 1 just is 2, equals 2. So setting reasonable expectations, and I mean, a particular pitfall that I have seen over the years is especially when you combine brands and your approach to the market. And what I mean by that is an example out of my industry, where you have two equipment suppliers to the plastics industry, Krasmafai and Netstal, that a few years ago merged their sales force, their approach to the market. And you know, although there were operational efficiencies, I mean, that were gained from the merger, but when you combine sales channels, you leave the door open to your competition. And you know, I mean, in that case, 1 + 1 was not even 2; it was less than 2. So just really, you know, be realistic about the expectations. Also be pragmatic. I have taken over a company several years ago, a semiconductor equipment manufacturer, two merged entities. I wasn't part of setting the objectives, but I was responsible for the integration of the two companies. There was, for example, an assumption. There was an engineering team of 34 engineers in California. The merged entity was in Massachusetts, and there was the need identified that 23 out of the 34 engineers were critical and needed to relocate to Massachusetts. Well, one of the 23 actually did, was willing to relocate. The others were not, but they were critical, so we had to maintain additional real estate, that we had to maintain an additional office because, again, I mean, we're not really. So a lot of pragmatic considerations, you know, and just be realistic with the expectations.
And I think you mentioned a very important point, especially also from an intercultural perspective, that is talent and also your employees. So Jennifer, I know we talked about it in the past a couple times, but what are some options to retain talent, not only during, but especially after a transaction? Because I know from a mindset, Americans, they think a little bit different, I would say, compared to Europeans if it comes to a transaction. And is my job secure, and how can you secure the talent?
Yeah, yeah. So definitely, you know, Americans are, for the most part, at-will employees who can be terminated at any time. So sometimes there's a concern when there's a transaction going on, what's going to happen to me? Am I going to be fired? So when the transaction is going on, when you've identified a lot of those key employees that you want to stay, you can offer a stay and pay package. So if you stay through the transaction, at closing, you'll receive a certain amount of compensation. If you stay with the company for 6 months, a year, 18 months, 24 months, you know, there's different ratchets up in the compensation as a bonus that you will receive. And that's one way to really retain talent. I will comment on Steve's comment about engineers and acquisitions and trying to get them to, you know, to move to Massachusetts. We've actually had a transaction in the opposite, where there was an acquisition out of Massachusetts with some key engineers, but we knew from the get-go it would be very hard to integrate them and to try to get them to come to the Midwest. So that was factored in as part of the overall integration and strategic plan to leave them where they were, because it's one thing to look on a piece of paper and say, yeah, we can integrate this business and move these people here, but when you get to a personal level, you know, we have connections, we have family, we have friends, you know, and the United States is a very, very large country, so it's not, you can't just say, oh, we'll pick here and move you here. You know, you just have connections, and you really have to think about that the humans, you have to think about the people, right? And really get on a personal level to understand that as part of any acquisition, not just culturally, but within, you know, each company as well, and how they function and how those individuals will react.
Garrett, if I may just add to what Jennifer said on the retention side, on the key management staff, professional staff retention, and I think, I mean, that is an area where some European companies that are less familiar with the American market, again, the employment at will, you know, there is a much higher insecurity by employees, even by management, constantly. I mean, every day, but especially during a time of change in ownership. And you know, I mean, besides having financial incentives, of course, that helps. But what I have found, you know, what is very important to do as well is have very open communication about your plans. You know, why are you making, as an acquirer, as a buyer, as an investor, why are you making this investment? It should be good for both companies. It should help the acquired company to stay vital, to continue to grow. And again, in my experience, it's much more important to have a very open and positive communication, I mean, with your management team, with the employment staff at all, maybe, than it would be in Europe.
Let me add one thing too, from the very front end of an acquisition, and I'm talking about the outreach to an American, say, entrepreneur, owner of his business. There is a natural, inherent advantage that Europeans have with a lot of those sellers. And that's a result of the European buyers who tend to have a lighter touch in operations and believe in more independence, just because you got to be independent if your CEO is sitting across the sea. But the other thing that's happening is that these sellers, especially the entrepreneurial sellers, get deluged from private equity firms that just, I mean, you talk to entrepreneurs we talk to them, every day, but every week they'll say we get something from a PE firm, pushing. And I would say when you come to the United States, or you look at North America at the very front end, understand there are advantages and use those advantages to be able to get in and tell a story that the sellers want to hear, quite frankly.
Mm-hmm. You just mentioned, or we just talked a little bit here and there, a little bit about private equity companies. So what I always think it's interesting is how can strategic buyers from a mid or small size company compete with private equity companies, especially during bidding wars? Do you guys have any experience with that?
Well,
Yeah.
Yeah, go ahead, Jen.
No, I was just going to say, I agree with you in that you put a very good reason and a story as to why you would work better with them than private equity. Strategics, in my experience, typically cannot move as quickly as private equity will. They'll want to do more due diligence, and sometimes they can't meet the multiples. But what you can do is give that seller more independence than private equity will. And sometimes, when I represent sellers and you're looking at between a strategic and private equity, what's your goal as a seller? Do you want to remain in the business? Do you want to have independence? Or do you want more money and to exit, and to understand that a strategic is going to look at your business and try to grow it? With private equity, they're going to try to grow it as well. There's going to be a lot more demands on you. And sometimes I refer to that as taking an arm and a leg and another leg. But go ahead, Chuck. But I was going to just confirm what you said about the story.
Sorry, we can't hear you.
I completely agree with everything you said. Just one, it's telling me my network connection is low, so I'll push ignore. But 10 years ago, we sold a U.S. company to a European company. The entrepreneur owner stayed with the company and today runs a division of that European company. So there's lots of interesting opportunities for entrepreneurial owners with a European buyer.
Mm-hmm.
If I may add something in terms of the PE firm versus strategic buyer, I think there's not in all transactions, but in a big number of transactions, there's a strategic advantage for a strategic buyer, and it comes with they can pay a higher price actually because there are potential synergies that that gives them an opportunity post closure or after the transaction to lower their overall operating costs. So, if you talk about synergies, integration costs, and so on, there is one area where they might be able to pay more and then at the end recover it or even get better outcome through the potential synergies that are there.
Yeah, it totally makes sense. And talking about synergies and especially here also data, because I know even before COVID, data was king, but now that we're more going into an automation process here, that everything is more going rapidly into digitalization than it ever has been before. What role does data analytics play in a transaction? I mean, because the data, especially in the due diligence process and everything else, is really important. Marcus, what do you see from your perspective on how important is data analytics and what kind of role play they for transactions, especially in transatlantic transaction?
Yeah, I mean, overall, about a year ago, I went to MIT for about 6 weeks for an executive certificate in data analytics, which clearly, that was my choice, but I knew this, it's a hot topic and it's through the hype cycle. I think the key points of data analytics in a transaction or before and after is really, it enables better decision making. It creates value. It speeds up the deal cycle, which is very important. And there's different areas there. There's people. You have people. They have know-how. They bring in their know-how. You have proprietary data from thousands of transactions. In our case, from a KPMG perspective, and then you have benchmark data, and then you use this data, put it in the right analytics model, and it really helps to create the value and speed up the transaction in general. So, the general outcome, better decision making at a higher speed. I think that's the key points on the data analytics part.
So if you have the right data, Jennifer, I assume for you, it also supports you and speeds up a little bit here and there the due diligence process?
Yeah, it does. A lot of what we do in due diligence is just from a legal perspective, looking at risks, identifying key risks from the buy side. One thing that we've looked at using, which doesn't make sense in all transactions, is actually AI to do some of the due diligence. In my experience right now, the AI that's out there does not replace someone actually doing the due diligence themselves. But I do see those solutions growing with respect to, as we've discussed, there's more in-depth due diligence going on. And a lot of that has to do with data, like Marcus said, data analytics. And so I think in the future, AI in this area is going to grow.
Mm-hmm. Yeah, I mean, AI, I think in general will be more and more implemented across any industry sector. By just taking a look at the time, I know we're almost at the end of our time here. We only have a couple more minutes left. So I have two more questions I think that's really interesting I want to ask you guys. So first of all, what are the challenges and opportunities of cross-border investment? I know sometimes if a company wants to acquire someone here in the US, they were looking into a financial partner here, for instance, also in the US, like a bank or a financial institute. But what do you really see? What are the challenges and opportunities of cross-border investments?
Well, let me start just by talking about market in medical, medtech. And half the world market is the United States. Even though we're not half the people on the planet, half the market is here. And the largest market in Europe is Germany. So what you find are companies that may be very specialized in what they do, and they hit a ceiling. And the only way to get through that ceiling is to expand geographically. We see the directions from the US to Europe and Europe to the US. So I don't think it's one particular example, but that is, I think, a real opportunity. It's kind of an imperative to expand in that way.
Okay, and I think one last question. So a lot of companies, when they enter the US market, they do think about, okay, should I acquire a company or should I do a greenfield? So what is your take on that? Because both strategic ways come with a risk, come with advantages, but especially for German companies with a market entry. What is your take on acquisition or greenfield? Steve, do you want to maybe start with that question?
Yeah, I think in general, I mean, the bias, I mean, that I see, I mean, is more on the greenfield side. I mean, that German companies, European companies entering the U.S. market have already decided or have a very strong bias towards establishing their own subsidiary or their own enterprise here. And I think that's a missed opportunity because I think to some extent that is driven by a desire of really maintaining a brand, maintaining a culture, maintaining the nucleus, I mean, of a company. And I think that is in some cases a wrong assumption. Because ultimately you will need to hire a local staff here, and you might not be able to fully impose or transfer that nucleus of your company in Mutterhaus. So I think there's a lot of missed opportunities because I do believe that European German companies could enter the market faster and actually with less risks in acquiring an established company in their field to enter the U.S. market. So that's my thought on the subject.
Mm-hmm.
Yeah.
Go ahead. Yeah, I would just quickly, I know there is a problem for every company in certain industries where where customers are extremely sticky or their regulatory environment. In the US, of course, we have the FDA. In Europe, there's this whole MDR thing coming on. And so these things, to get a new customer could take you 5 years. Whereas if you buy somebody, that new customer is yours on day one.
Yeah, I
Yeah, it's
see
all
two
about-
advantages.
Go ahead, Jennifer. Sorry.
I see two advantages. One, customers, and two, talent. It's going to speed up your ability to penetrate the U.S. market if you do an acquisition as compared to a greenfield, in my experience. Go ahead, Marcus.
Yeah, thanks. You know, it's also about critical mass. I mean, really, greenfield approach starts with a nucleus. You know, critical mass might not be there. It's hard to attract the right people and so on, and to acquire customers. So definitely more challenging. And yeah, I think it depends on the size, complexity of the company and what they want to accomplish and the specific situation. But in general, I think you know, critical mass is a big issue.
Mm-hmm.
Yeah.
All right. I think that was the perfect ending of today's webinar. Unfortunately, we're running out of time. At this point, thank you to all the participants. Again, please feel free to go into the handout section and download all the information from our great speakers today. Having that said, thank you so much for all taking the time here in the US and also in Germany. I know it's getting a little bit later in Germany right now. But thank you again for taking the time, sharing all the valid and great information. I think that was excellent panel discussion. Really appreciate it. Again, if you join us from anywhere in the US or also in Germany, if you have any questions regarding the US market, I can only recommend reach out to either the panelists or to us here at the German American Chamber of Commerce. We're more than happy all to support you in your market entry or expansion, be it through mergers and acquisition or any other service, any other market entry strategy you have in mind. Having that also said, today was the last session of our Success in the US series. So we will have basically a winter break, but we will start again next year with our series. The topics are not final confirmed yet, but we will inform you. If you're interested or if you have any topic you're interested specifically, please feel free to send me an email and we will take this under consideration. Again, thank you so much for joining us today. And I wish you all a great rest of your day and a happy holiday season. And I hope to see you all next year with additional panel discussions. Thank you so much.
Thank you, Garrett.
Thank you.
Thank you, everyone. Bye.
Bye.